Welcome back to the channel, and thank you for joining me today. I'm Algabot, your guide to the world of automated trading systems for MetaTrader 5. In this video, we're taking a close look at an expert advisor called Break of Structure Retest. This is a pure price action strategy inspired by the smart money, or ICT, school of thought. It maps the market structure using swing pivots, waits for a clean break of that structure, and then enters on the retest of the broken level. By the end of this video, you'll understand exactly how it reads the chart, how it places its trades, and how every single parameter shapes its behavior. Let's dive in. So what exactly does this expert advisor do? Break of Structure Retest is a continuation strategy, which means it tries to join an existing move rather than predict a reversal. What makes it interesting is that it uses no indicators at all. There are no moving averages, no oscillators, and no lagging signals. Instead, it works entirely from the raw open, high, low, and close of each candle on your chosen time frame. The strategy begins by mapping market structure. It identifies swing highs and swing lows using something called fractal pivots. A swing high is simply a candle whose high stands taller than the candles immediately around it, and a swing low is the mirror image. These pivots become the reference points that define the trend. From there, the EA watches for a break of structure. When price closes firmly above the most recent swing high, that's a bullish break, a sign that buyers have taken control. When price closes below the most recent swing low, that's a bearish break. But here's the key discipline of this system. It does not chase that break. Instead, it waits patiently for price to pull back and retest the level that was just broken, because broken resistance often becomes new support, and broken support often becomes new resistance. This style suits the patient, structure-focused trader who prefers clean, rule-based setups over constant activity. Because every entry requires a break, a pullback, and a rejection, the strategy is naturally selective and may go long stretches without trading. It works on any market and any time frame that respects structure, from major foreign exchange pairs to indices and metals. Remember, everything we discuss here is for educational purposes only and is not financial advice. We're studying how the logic works, not making any promise about outcomes. Let's walk through the exact logic step by step. The EA acts only once per fully closed candle, so it never reacts to the noise of an unfinished bar. On each new bar, it first updates its map of market structure, confirming any new swing high or swing low using the pivot length setting, which defines how many candles must sit on each side of a pivot. Next, the strategy detects a break of structure. For a bullish setup, the most recent closed candle must close above the last confirmed swing high. For a bearish setup, it must close below the last confirmed swing low. When this happens, the EA arms a pending setup. It records the broken level as the retest target, it remembers the origin of the impulse leg, and it measures the size of that leg, because several calculations are scaled to it. Now the waiting begins. The strategy does not enter on the break itself. It watches for price to pull back into the retest zone. The width of that zone is controlled by the RetestBandPercent, expressed as a fraction of the impulse leg. For a long, the candle's low must dip into the zone around the broken level. But tagging the zone is not enough. The EA also demands a rejection candle, a bullish candle that closes back above the broken level, confirming that buyers have defended it. Only then does it signal a buy. The short side is the exact mirror. When an entry triggers, the stop loss is placed just beyond the retest candle's extreme, buffered by a fraction of the impulse leg set by the stop buffer percent. The take profit is then a fixed multiple of that risk, defined by the risk-reward ratio. With the default of 2, the target sits twice as far away as the stop. Finally, the strategy protects itself from stale or failed setups. If price closes back through the impulse origin, the setup is invalidated immediately. And if the retest never arrives within the max retest bars window, the pending setup simply expires, and the EA goes back to watching structure. Let's read through the actual MetaQuotes language code on your screen, just as you'd see it in MetaEditor. At the top, we have the input parameters. Pivot length, set to 3, controls how wide a swing pivot must be. Raise it and you'll get fewer but more significant structure points. RetestBandPercent, at 0.15, defines how generous the pullback zone is, measured as a fraction of the impulse leg. Stop buffer percent adds a little breathing room beyond the swing, so a stop isn't clipped by a wick. Risk-reward ratio, at 2.0, sets how far the target sits relative to the risk. Max retest bars limits how long the EA waits for the pullback, and lots sets the order size. Now the heart of the logic, the bullish entry. The variable named tag checks whether the current candle's low has dipped into the retest band, just above the broken structure level. The variable named rejection checks two things at once: that the candle closed higher than it opened, and that it closed back above the broken level. Both conditions must be true. When they are, the code reads the current ask price as the entry. The stop loss is set to the lower of the candle's low or the broken level, minus the buffer. It then measures the risk as the distance from entry to stop. As long as that risk is positive, the take profit is calculated as the entry plus the risk-reward ratio times that risk. Finally, Trade.by sends the order with the stop and target attached, and the pending side is reset to 0, so the setup can't fire twice. Let's bring this to life on the chart. Watch the first few candles build a clear swing high around 1.0882, marked by the blue structure line. Price then surges upward, and one candle closes firmly above that swing high. That's our bullish break of structure, and the broken resistance now becomes a support level to watch. Notice the strategy does not buy here. Instead, it waits. On the next candle, price pulls back down and taps the green retest zone right at the broken level. Then a bullish candle closes back above it, the rejection the strategy was waiting for. That triggers the buy entry. From there, price climbs steadily, and a few candles later it reaches the take profit, twice the distance of the risk we accepted on the stop. Now watch the second half of the sequence. After topping out, price rolls over and carves a swing low near 1.0890, and the blue structure line steps down to track it. Price bounces once, then a candle closes decisively below that swing low. That's our bearish break of structure. Again, no immediate entry. Price rallies back up into the red retest zone, testing the broken support as new resistance. A bearish candle then closes back below the level, confirming the rejection, and the sell entry fires. Price drops away and reaches the take profit below. In both directions the pattern is identical: a break, a patient retest, a rejection, and only then a trade. This illustration is for educational purposes only. So there you have it, a complete walkthrough of the Break of Structure Retest Expert Advisor. We covered how it maps market structure with fractal swing pivots, how it confirms a break of structure on a candle close, and how it patiently waits for a retest and a rejection candle before entering in the direction of the trend. We also looked at how it builds its stop beyond the swing and sets a fixed risk-to-reward target. Everything you've seen here is for educational purposes only and is not financial advice. If you found this breakdown helpful, please give the video a like, subscribe for more MetaTrader 5 strategy analyses, and drop a comment with the strategy you'd like me to cover next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.